Hey, good morning. Let's go over today's trade plan. So yesterday we saw a breakdown below the 81 to 83 area, which marked a break below the recent balance. And overnight we saw that area hold as resistance, and the sell side can maintain control below that 81 to 83 area. So heading into the open, we know that the sell side is more dominant. At the same time, we are at support, and the first inflection point off the open is going to be 70 to 72. As long as the market holds above 70, 72, it tells you that at least we're not getting that massive major selling that can lead to a move lower into the 61.5 to 63.5 zone. So the sellers do have to be careful down here at the 70 to 72 because you can get a reaction off of that zone. Now, that doesn't mean that holding above 70, 72 means that buyers are in control. It just shows you that there's a little bit of stability. Location-wise, it's an aggressive spot to enter a new short. On the upside, we have resistance at 79.5 to 81.5, and that is the inflection point where control can shift short-term between the sell side and back to the buy side. So if we can get some stability here at 70, 72 and then actually break above 79.5 to 81.5, then we could see a move back up towards the 88 to 90.5 resistance zone where sellers can still be active on first test. On the downside, if you break below 70 to 72, that would just confirm the sell side being dominant, and we can get a move down into the 63.50 area, at which point responsive buyers can still step into the market and push the market back up towards 70, 72 and potentially even back up towards the prior VPOC of 77 and the 79.5 to 81.5 initial resistance zone. So off the open, what we're going to be looking for are signs that are either confirming the sell side in control, because at this point you are going to have to see some pretty weak AD readings, and the momentum is going to have to be on the downside to really support a break below the 70 to 72 area. And if you are not getting that downside momentum and you're not seeing that broad market weakness that really would suggest initiative sellers active in the market, then you want to be careful shorting this market because we are still in a big balance. Short term, we did break down below a trading range and the sell side is dominant below 79.5 to 81.5. But if we don't get a continuation of that today, then we could still go right back up towards the 79.5 to 81.5 and possibly up towards 88 to 90.5, although we would have to see some pretty decent upside momentum for that to take place. The other thing that's possible is that we break below 70, 72, but then we just start balancing within a range and we get buyers off of the 63.50 support, maybe even a little bit ahead of that, and then we balance within a range. So in order to go lower, you have to see some very weak AD, you have to see negative momentum. It doesn't mean it's going to be a trend day. It can still be a balanced session. We can simply balance at lower prices. If 70, 72 holds, then we can simply balance within the recent range, perhaps go a little bit higher towards the 88s, maybe even sell a little bit ahead of that, and then, establish a range over there. So we are going to be watching to see, are the real-time conditions supporting the idea of a trend type move, or is it still more or less balanced and simply balancing at a lower or higher price from this point on? But what we do know is that the sell side is in the short term dominant right now, and it can lead to a break of 70 to 72. So we do have to be careful in this range and in this overnight balance. But we have to at the same time be open to the idea that it doesn't have to necessarily trend down from here. Now, that's going to require looking at the market in real time to see what the signals are showing us, how it's developing. So be open-minded on that idea. We can go down to 61.50, 63.50, and if there's some major selling, maybe even a little bit lower, but look for that. Because absent that major selling, that downside momentum, responsive buyers can be active, and we can simply balance. So look at the real-time signals, look at the momentum, look at the AD, and determine whether you're seeing signs that support trend, that support a single side in control, or whether it's really more two-sided, in which case you can still short if the sell side is more dominant, but you need to secure a good trade location. right? So without that, it's going to be very difficult to manage that trade. Whereas on the long side, as long as you're getting decent location here, it can still work out. You can at least get some time to manage that trade. So those are the main ideas heading into the open. We are heading into the weekend, so keep that in mind as well. The dynamics on Friday afternoon are a little bit different because that's the only day where the following 2 days the market is actually closed and you can't really manage risk. So heading into Friday afternoon, even if the market is weak early in the session, you can still get some short covering just to kind of manage that risk heading into the weekend, even on the sell side. So keep that idea in mind, and it applies even to the longs. So, if the market's trading back up at, let's say, 88 to 90, heading into Friday afternoon, most likely we are going to get selling there. Again, just simply because of the way most traders and investors manage risk. So those are the main ideas heading into the open. Let's see how the market reacts to 70 to 72. Let's see what the underlying conditions are telling us, and then take it from there.